Stocks higher on optimism about what's being characterized as some sort of arrangement, potentially, in the Middle East. Of course, we've been here before. 30 minutes until the start of trading. I'm David Gura.
And I'm Vonnie Quinn. Matt Miller and Danny Berger are off. Bloomberg Open Interest starts right now.
Coming up, the AI money machine keeps rolling as Intel, Nvidia, and Anthropic line up billions.
Meanwhile, oil erases earlier gains as Pakistan signals optimism over a US-Iran deal, even as strikes continue.
And an inflation test looms, investors bracing for key data that could shape the Federal Reserve's next move.
All right, let's get some individual movers. Pre-market, we have Intel raising $20 billion, a third more than it was expecting to in that share sale. Demand across the AI supply chain remains strong. In fact, there was $100 billion worth of demand for that $15 billion offering. And as you can see, Intel down another 0.2% after an almost 4% decline yesterday. Nvidia, meanwhile, has some heft still. It's tapping some of the largest players on Wall Street for $500 billion in a funding platform, funding commitments, which CEO Jensen Huang said will underwrite AI infrastructure costs for customers. And Nvidia up 1.7% on that. And do keep an eye on CoreWeave. It's been on a tear lately after a few down months. It reports after the closing bell.
Let's move away from AI, although AI is in everything, including this next stock. Hims and Hers incorporating AI into its production as well here, as they mentioned their earnings yesterday. It raised its full-year revenue outlook yesterday, but shares of the company down this morning after Hims posted a much wider than expected loss for the quarter as weight loss drugs drove costs higher. It also announced plans to sell peptides by the end of the year, pending approval, of course, from the Food and Drug Administration. Vonnie.
Well, David, let's get back to the AI trade now with Bloomberg Tech host Ed Ludlow in San Francisco. Ed, there seems to be no end to the appetite of this market and certainly the major players in this market for the potential to issue AI products and debt related to them.
Yeah, I mean, Nvidia is pushing back higher today. When that news first broke on the $500 billion initiative with Wall Street, the stock was under pressure, right? In part because of the whole circular financing debate that we can get into. You know, what Nvidia is trying to do with those 6 firms is make the compute an investable infrastructure asset class of its own. So Nvidia works with those 6 firms to be the platform as channels to tap investor interest. SPVs or special purpose vehicles get set up. They borrow tens of billions of dollars. The compute becomes collateral, and it's then leased out to Nvidia customers. And, you know, I think the degree of separation that Nvidia is pushing is that it is third-party capital. Those 6 firms on the screen tap the investor pool. And so that it is separate from Nvidia financing its own customer. It is the idea that it takes the burden away. It's just financing. It makes the whole process move more smoothly without Nvidia having to lower prices for extremely expensive compute platforms.
We heard from Jensen Huang yesterday, says he called up these 6 executives and not one of them balked at the prospect of this financing agreement. I'm curious sort of who the audience is for this. Yes, they have these firms, but who are the ideal investors here for this kind of product, Ed?
Yeah, I think what Jensen Huang said is that nobody said no, right? In other words, everybody said yes. Yeah, I mean, it very much, based on Bloomberg's reporting, looks like this is debt, right? Rather than doing some kind of other mechanism. In the past, for example, with XAI or SpaceX AI, Elon Musk's AI lab, they've talked about setting up SPVs where you basically raise equity as well through the SPV. But again, the whole point is that the SPV owns or holds the compute and leases it out. So through those 6 names, you know, those are some of the giants of US finance and investment. You have a very large pool of people interested in all kinds of credit.
One bank among them, Goldman Sachs, of course. Ed Ludlow, thank you very much. Of course, the host of Bloomberg Tech. Shares of Rocket Lab falling after the company signaled a new potential delay with its Neutron rocket. Bloomberg space reporter Bruce Einhorn joins us now with more. Talk about the details of this earnings report, but let's start there with that rocket and sort of what this portends. I guess the company reasonably confident, Bruce, it could get it to the launch pad here by the end of the year, but there is a distinction to be made here from getting the rocket to the launch pad and launching it into space.
Yeah, the concern there is that previously the company had said that it would launch Neutron by the end of the year. In its announcement yesterday, the company said that it would have Neutron on the launch pad by the end of the year. And hedged a bit about when that launch would be. I think the concern that investors might have about this is that this is a rocket that has been in the works for a very long time, and there have been multiple dates given by Rocket Lab for when it's going to launch. So if we're looking at an additional delay, then that might be something that raises concern about just how big of a delay are we looking at here.
Bruce, it's the second most frequent rocket launcher after SpaceX. Can it, though, raise the cash that SpaceX has been able to raise in order to continue its efforts?
Well, I think that gets to why people are focusing on the new rocket, Neutron. So yes, Rocket Lab is the second most prolific launcher in the United States after SpaceX. But that's with this rocket, Electron, which is a very small rocket. It doesn't have a lot of capacity to get things to orbit, especially compared to the Falcon 9, SpaceX's rocket. With Neutron, Rocket Lab is looking at a major upgrade in terms of capacity. It still doesn't get them to where the Falcon 9 is, let alone Starship, SpaceX's new rocket under development. But it gets them closer, and they could make certainly a lot more money per launch on Neutron than they can make on Electron. So a lot really does ride on the ability of Rocket Lab to get this Neutron rocket, not just to the launch pad, but get it up into orbit.
Greatly appreciate the update, Bruce. Thank you very much. That's Bloomberg's Bruce Einhorn joining us. And in the next hour, we're going to speak to Rocket Lab founder and CEO Peter Beck. Turning now to the Middle East, Brent is wavering after Pakistan signaled progress in U.S.-Iran talks. But it's wavering after report the U.S. also fired at a Panama-flagged ship that attempted to thwart the Hormuz blockade. President Trump now making reparations for Iran's hostilities a key issue in peace talks.
Iran is broke, totally broke. They asked for reparations, you might say, or they asked for money for the damage that we've done. I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period. If there's damages to be paid, I think Iran should pay those damages.
A lot of news on this morning. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Look, the U.S. has not been a participant in these talks. We know that Iran and Oman have been talking for a while here. Pakistan was an intermediary for a long time. Qatar was as well. Help us make sense of all of this, Tyler, sort of where things stand right now when it comes to some sort of deal, some sort of arrangement, I think is what the Pakistanis said about what could happen here.
Right, David, we got this indication that signaled some optimism from Pakistan's defense minister, going on to say that things are, quote, shaping up in favor of peace. As you mentioned, Pakistan is a key mediator in these talks. But at this point, we've gotten very little indication or detail on what a potential breakthrough would really look like, because instead, publicly over the last few days, we've only seen the sides really dig into their positions, including this new demand from President Trump that, as he outlined, would include Iran being on the hook to pay compensation to families of Iranian protesters who have died over the last 50 years, he said, and that Iran should be held accountable for the death and damages related to conflicts where its proxies operate, including in Lebanon, Syria, Yemen, and Gaza. He didn't provide further details, but that, of course, came on the heels of Iran demanding compensation for war damages in exchange for reopening the Strait of Hormuz, keeping in mind that the issue here is that we do know that there were talks underway in some regard, that there would be funds allocated to help Iran rebuild after the conflict, but that was considered to be a precondition for talks about potential curbs on Iran's nuclear program, not for reopening the Strait. Now, David and Vonnie, amid this standstill and Iran still leveraging its grip over the Strait of Hormuz, Bloomberg News was able to get some new satellite imagery that does show that ships are continuing to transit dark with their transponders off in order to complete what's known as a shuttle route, where essentially they are transferring their cargo to ships that are waiting outside of that waterway. New data showing us that at least 12 such switches happened yesterday alone.
Wow, that is one fix, I suppose, but it can't be done en masse, right? And we had Wall Street Journal reporting to suggest that a U.S. had fired on a ship that was trying to break its blockade of Iran, and we saw oil spike this morning, possibly because of that attack. Tyler, it's on a hair's breadth, right, in the Strait of Hormuz. At any point, there could be skirmishes or strikes or anything like that.
That's our understanding at this moment, Vonnie, amid this Wall Street Journal reporting that this Panama-flagged vessel appeared to try to reroute around the U.S.'s military blockade. Their reporting indicating that the U.S. military gave multiple warnings that this ship ignored, and then they fired on it. But it goes to show that the U.S. is still very much imposing that naval blockade, as this White House has said that it is opting for that economic pressure over potentially restarting any broader military operation. But we do know that the pressure is building here at home as we continue to see stalled traffic in the Strait. Just yesterday, Bloomberg News was able to confirm that the president has indeed extended that Jones Act waiver by 90 days in a bid to make it easier and cheaper to transport these critical products like gas, diesel, and jet fuel.
All right, Tyler, thank you so much. That is Bloomberg's Tyler Kendall in Washington, D.C. Let's get a check on these markets now, 20 minutes before the open. And we are seeing futures pointed higher. Don't forget, we were down about 0.3% on the S&P yesterday, having hit a record the day before. So we may, again, approach those record levels. Certainly the VIX at 15 is very complacent, very calm. We had oil spike earlier with Brent very close to $90 a barrel, potentially after that attack in the Middle East. Right now, though, down 0.33% on the prompt month contract, with Brent trading at 87 and change. Yields, though, continue to march higher. We have the 10-year yield at 4.68, off its highs of the session. It was at 4.73 almost earlier on this morning, but still elevated. Let's get a look at some other movers now on our radar with Bloomberg's Nora Melinda.
Hey, Vonnie, some stocks in focus. First up, Upwork sinking double digits, down about 17%. That's after cutting its full year outlook for both revenue and profit. Now, analysts say that AI may be starting to take a bite out of the business, and this stock was already having a rough year leading up to this point. It's lost more than half of its value so far year to date. Now, from finding a job to finding a new pair of sneakers. On Holding is tumbling after second quarter sales disappointed. The company's trying to keep those sneakers premium, holding prices up rather than discounting some of those older styles to clear them out. And finally, apparently Bitcoin mining isn't the only game in town for Riot Platforms. The company just landed a $9 billion plus deal with Anthropic to provide data center capacity for artificial intelligence. And if Anthropic sticks around, that deal could eventually grow to $16 billion. Shares of Riot Platforms up about 18% in that pre-market trade. Those are your morning movers. David?
Quite a spike there, Nora. Thank you very much. And coming up here, Hims & Hers planning to add another product to their pipeline as weight loss drugs eat into the company's margins. We're going to bring you those details next. This is Bloomberg Open Interest. Now to high interest, a look at what's making headlines around the world. New details emerging around an Iranian assassination threat against President Trump last month. The Washington Post reporting the president flew secretly from Turkey on an alternative military aircraft, while the White House said he was aboard Air Force One. The president boarded the old Air Force One in view of cameras, then was secretly shuttled to a smaller plane via an airport catering truck. Apple still planning to offer a glass-centric overhaul of the iPhone for the device's 20th anniversary. That is despite an analyst report from Jefferies that the move had been canceled. Sources telling Bloomberg the company expects to launch iPhone Pro models next year that will make use of a new glassy look. And Hims & Hers planning to sell popular peptides before the end of the year. The company awaiting a decision from the U.S. Food and Drug Administration on whether to loosen restrictions on 7 different compounds. This comes after the company cut its full-year profit outlook. Vonnie.
Well, for more on Hims & Hers, we're joined now by Bloomberg Health editor John Tozzi. John, this company has to deal with a lot of policy changes. Is part of what it's trying to do for investors to tell the future and see what exactly is going to be allowed by this administration and the FDA and associated regulatory agencies before it happens?
Yeah, I mean, Hims was looking at this market even before the recent FDA action. They bought a peptides manufacturing facility in California last year, so they're clearly gearing up for entering this market. We saw recently the FDA advisory committee recommending loosening some rules and expanding kind of access to what are right now kind of unregulated injectable substances that a lot of people are using without a lot of oversight.
John, this is a company for which GLP-1s have really been the bread and butter in recent quarters, and certainly still the case here. What did we learn from yesterday's report just about where the company is going directionally? So we talked about peptides here. It had a host of problems with the compounding work it was doing, as you and your colleagues have reported on. reach these agreements, these deals to sell name brand GLP-1s. What do we learn about sort of the future of this company after that, or not including that exclusively?
Yeah, I mean, I think one of the things that is going on, they're shifting from compounded GLP-1s to brand name GLP-1s. We're seeing that happening. We are seeing a greater focus on international markets and then new products, again, like peptides. Recently launched products include things like testosterone, menopause and perimenopause products. So they're trying to widen kind of the addressable, the set of needs that they address.
Can it be sure that peptides are going to be sort of, given the green light? And I know a lot of people are using them already and so on, but at the same time, if you buy a manufacturing facility, you have to be pretty sure at this point.
Yeah, and I think we don't know how much HIM's paid for that facility. It seems like a bet, and I think we'll have to wait and see how it pays off. But yeah, I think there is a lot of uncertainty in that market, and as you said, there are policy risks to this kind of approach when you're looking at expanding into markets that may or may not be, fully authorized.
I was talking to our colleague Madison Muller, who covers this company, and I asked her yesterday, what is Hims and Hers? How would you characterize it? And I wanted to put the same question to you here. I mean, this is a company that's gone into so many different types of medicine, has this telehealth component as well. How do you assess kind of the novelty of what it's doing here, and does it have a purer competitor in the space?
Yeah, I mean, I think at its core, it is a telehealth company, right? And that they are trying to expand access and make it easy for people to get treatments that they want, get the prescriptions and get the medications without, going to a traditional in-person clinic and getting a diagnosis and taking a, paper prescription to the pharmacy, right? Like, I mean, that they are trying to bypass all that and make it much more on-demand, consumer-driven healthcare.
The problem is, does it have a moat? Because it would seem to me that if peptides are suddenly everywhere, and I don't know what the total addressable market for peptides is, but I can only imagine, at least in the beginning, it's going to be a large market. Won't Amazon Health just get into the same business?
Yeah, and I mean, I think they do have competitors from other healthcare companies, other telehealth companies. So yeah, I think that's a reasonable question in terms of the future of this company. Like how can they strategically maintain whatever competitive edge they're trying to build.
All right, well, we'll see how investors react. John, thank you so much. That is Bloomberg's John Tozzi. Coming up, Nancy Tengler discusses stubborn inflation as Wall Street bankrolls Nvidia's $500 billion funding plans. This is Bloomberg Open Interest.
The combination of private credit and just regular public, it's sort of at some point is going to run its course, and at some point it's going to have. So far, it hasn't been that big of a problem, but I think at some point we're going to see some big, losers and some winners, and that's when we're going to see a little bit more differentiation.
That was Charles Schwab CIO Omar Aguilar on surveillance. Let's bring in now Laffer Tengler CEO and CIO Nancy Tengler. So Nancy, a lot of concerns in this market today, a constant drip, if not a flood, of AI products and structured products and issuance, another $500 billion being underwritten by several of the big companies on Wall Street. But then also we have inflation data tomorrow morning.
Yeah.
But the S&P is at a record.
Yeah.
Are you worried at all?
Well, I'm always worried, Vonnie, about everything, but I do think inflation will come down. That is less of a worry. And remember, these numbers are fraught. They get revised pretty dramatically on a regular basis. If you look at trueflation.com, that's a private sector measure, 1.7% on the way down. A lot of inputs, no government intervention. So I'm not worried about that. I am starting to become concerned about this circular financing. I had not been. This latest deal with Nvidia and the private equity or the private credit guys is starting to at least raise my awareness.
Yeah, it was a little too on the nose seeing all those CEOs gathered around the table at CNBC with Jensen Huang as well, circular table, I should say. I want to ask you what you make of what Jensen Huang is proposing here, that we could see compute as an investable asset. Does that make any sense to you at this point as we think about the way that the technology is developing so quickly here and, the longevity of this is still very much in dispute.
Yeah, well, I do, David. I read an article or a study by Goldman Sachs, and they're predicting $7.5 trillion in infrastructure spend, compute, data center power, over the next 5 years. That's a lot of spend. And you just had Google renting from SpaceX for $920 million a month for 110,000 NVIDIA GPUs. So I do think there's sustainability. I just think we need to step back a little bit and look at financing. Now, that said, we own NVIDIA. We added it to our value strategy. We've owned it in growth forever. And they have huge amounts of free cash flow and a pristine balance sheet.
Well, that's just it. So Nvidia is likely to be fine, right?
Yes.
Jensen Huang, obviously showing that it still has the heft in AI and cementing that by doing this. But you have Meta leasing out now. You have Riot Platforms this morning leasing out. Probably some other Bitcoin companies will do the same thing because they have so much compute. It's like compute has turned into a utility.
Yes.
So who will be the winners? It's just a commodity at this point.
It's becoming a commodity, 100% right, Vonnie. I think the winners will be the CEOs that pivot. So Palantir has declared that they're the only company on the planet that's taking tokens and creating economic value. I don't know if that's true, but we did see it from Microsoft and Amazon where they're starting to monetize the compute. I think that Adobe won't be a winner. At least we exited a while ago. Maybe Salesforce is going to be a little bit challenged, but I do think the hyperscalers are pivoting in the right direction at the right time.
Come back with you in just a moment here. This sort of on the one hand, on the other hand, is something we want to get into. So we've talked about AI. Don't we want to talk, Vonnie, about the inflation side of things?
Yeah. Absolutely.
As well.
Lots of data coming up this week. And let's get a check in markets, David, as we head towards the opening bell. And we do have futures pointed higher now. They are clambering ever higher as this market tries to look for more records. Volume low, has to be said. We're at a 2-week low on volume, but crude oil is off its highs now, just trading at 87 and change on Brent after we had a little bit of relief potentially on the Middle East. But you are seeing yields elevated, if again off their highs, with the 10-year yield back down to 468.22. It reached 473 earlier on. Back with the opening bells and Nancy Tengler in a moment on Open Interest.
Moments away from the start of trading. This is Bloomberg Open Interest. I'm David Gura. Let's take a look at futures here before the opening bell. In New York, we see S&P futures up 15 points, about 0.2%, 77.92. Some wavering in the markets this morning, but again, some optimism on the heels of those reports that maybe we are getting closer to some sort of deal in the Middle East. See NASDAQ futures and Dow futures up as well as we turn our attention to the New York Stock Exchange downtown, where GXO Logistics, Greenwich, Connecticut-based logistics company, ringing the opening bell at the NYSE. This is a company that went public 5 years ago today. We see the CEO of that company ringing the bell there at the New York Stock Exchange. And turning over here to the NASDAQ market site, see Inc. 5000. So, of course, a special issue of Inc., the editor-in-chief of that magazine ringing the bell here. This is a list, a comprehensive list of 5,000 private companies. I think the number one company on that list, I glanced at it this morning, a Palo Alto-based video production company. See if it goes public in the years ahead. A fascinating list to look at there. Vonnie, that's where things stand here as the bells are ringing.
All right. Well, it looks
across Wall Street.
Portion of those 5,000 are perhaps on the
some
stage
percentage is there.
We'll take a look at that list. Some portion of it anyway a little bit later on, but for now let's take a look at some of the stocks that were moving pre-market as well. Of course, Intel raising $20 billion, a third more than it originally had intended to raise in that share sale. It was down yesterday by almost 4%, down another 1.25% today. Nevertheless, still above the price at which those shares were offered. They were offered at $95 a share, and there was $100 billion worth of demand for those shares, so pretty endless. Nvidia cementing itself as the AI captain, if you like. It's up 1.6%, having been down yesterday, but it's regained those 220 and change levels that we hadn't seen for some time. The story today, of course, is that it's gathering a consortium of companies to offer a platform of $500 billion worth of financing for the AI infrastructure build-out for anybody to take advantage of. And then keep an eye on CoreWeave. We're up 5%. This is, of course, a very volatile stock, but it's a neo cloud, and obviously all of those leasing companies are in the news today. It does report earnings after the close and will be a bellwether for some of the other neoclouds, David.
Yes, Vonnie, thanks very much. And outside of AI, we're also watching Hims and Hers, which raised its full-year revenue outlook. But shares of that company down 2.9% after posting a much wider than expected loss for the quarter as weight loss drugs drove costs higher, also announcing plans to sell peptides by the end of this year. I want to bring back Nancy Tengler now of Laffer Tengler. She's the CEO and CIO of that company. And Nancy, you've said here that this is an economy in transition.
Yes.
Here we are on the precipice of some really critical data that we're going to get tomorrow, inflation data.
Yeah.
I think there was some agita in the market on the heels of that labor report from last week. Put the two of them together. I think we have a Federal Reserve policymakers kind of reevaluating the balance of risks here. What are you expecting when it comes to those inflation numbers tomorrow?
Well, I think they could spike back up because we saw oil go back up. We'd said we thought they would get a negative print last month. I think a couple of things. What Fed Chairman Warsh, I think he's being underestimated. And what I think he understands is productivity-driven growth is disinflationary. He's kind of channeling his inner Chairman Greenspan. I was managing money back then, and you cannot underestimate the power of that kind of growth. That's what I mean by an economy that's in transition. We listen to the companies. The companies are telling us they're much more productive. They are producing more with less. So not necessarily cutting jobs, but producing more.
And this is AI related principally, or do we not know yet?
Most of it, but also just automation. I mean, our investing theme for the last 5 years has been old economy companies pivoting to the new technologies. That was digitization when we started, and it's now robotics and power and infrastructure and AI and cloud computing. So I think there's a lot to love. Earnings growth continues to delight, and I think we will continue to see that for some time.
So why is the bond market so unsettled, Nancy?
I think it's a little taper tantrum in reverse. I think partly because we do have a ginormous deficit. We are now topping $100 billion a month in interest payments. I mean, that alone is problematic for the bond market. But I also think they're testing him. You're hearing a lot of people, Warsh that is, you're hearing a lot of people say that he doesn't have credibility. I don't buy it. I think he's 2 steps ahead, and he's letting the market do the work for him. And that is what we used to do in the old days. We didn't get, spoon-fed guidance. Remember, Greenspan didn't talk, and when he did talk, most of us didn't know what he was talking about. So I do think you want to watch on this. The 10-year at 4.6, 4.7. I mean, we averaged 6 to 6.5% in the 90s, and that coexisted with robust stock returns. So.
You write often and talk about often kind of the resonance that we're seeing with the 1990s, so you bring up Alan Greenspan, and I wonder if you see that in the way that Kevin Warsh is speaking today. I mean, he was very upfront about the fact that he wants to kind of use a similar playbook that Chairman Greenspan did. Is he doing it? Are you among those investors who emerged from that press conference feeling unsatisfied that he's not quite there yet in terms of saying what the reaction function is and how the Fed is kind of seeing the path forward with enough clarity? Do you need more, or are you happy with what he's doing thus far?
No, I'm happy. I think the Fed should do their job. I think he's going to use the balance sheet more than raising rates. That's a much more humane way to solve the problem of fast growth. I think we've seen that the low-income cohort is doing better from an income growth standpoint, even better than the top-income cohort. So I think there's a lot of things that the market is not paying attention to, and they will. And what they're paying attention to right now is he's not giving us enough information. Yeah. And that's a transition also.
A lot of savvy investors were short bonds for a long time because they thought this situation was untenable, right? That long end yields in particular would have to rise. So what's to suggest, and there are a lot of reports out there that the Fed chair and maybe Scott Bessent are unhappy with rates this high, but what's to suggest that they wouldn't have been expecting that? I mean, they would have been expecting it any time in the last several years, according to their positioning back then.
Yeah.
So maybe it's okay to have yields this high for some time and then bring them back down. Could that be a possibility?
I think so, Vonnie. I mean, I think they're unhappy because they've got to make debt payments. So Scott's having, Secretary of the Treasury, Mr. Bessent, is having to issue at the short end. So that, that's a little bit. I don't think that's the policy he wants to pursue. But if you look at where we are, credit spreads are still tight. I don't think that we're at risk, even with all this circular financing. It's the right companies. In the 90s, these companies had only debt on their balance sheet and no earnings or light earnings. We are in a much different situation now. So I think we expected rates to go up. We waited and we're extending duration. That may or may not be the right decision. We don't know yet, but we're going to move ahead with that policy.
Let me bring us back to equities to end here. And I'm curious if you're satisfied with how leadership is broadening. I saw our colleague John Authors talking about the guest list being expanded here. It had been confined to the Magnificent Seven and these big tech companies, these hyperscalers. Now it does seem like it's broadening some. Are you happy with sort of the degree to which that has been happening?
I think that had to happen. I mean, the biggest concern I have is OpenAI, because a number of the companies that we own are dependent on them as a customer, and I just don't see really strong leadership from that company. But yes, I think broadening it out is better indeed, and that you'll see the winners and losers pretty quickly. I mean, you know, we had a lot of pressure on Blue Owl not too very long ago. So we'll see. But NVIDIA leading the charge is a comfort to many. As a shareholder, I'd like them to get behind. I don't want them leading.
All right, Nancy, always a pleasure to get your insights. Indeed,
Thank you.
Yeah, that is Nancy Tengler there of Laffer Tengler joining us. But let's get a check on the stock market now. We're just a few minutes into the trading day. Don't forget, we were coming off a record on Monday, a little lower yesterday by about 0.3%. And it looks like there's plenty of optimism back in this market with more than 300 companies trading higher today. Of course, we have had oil wavering, so we can't blame everything on oil. But you're seeing a lot of the chip makers and a lot of the AI stocks on the move, thanks to this $500 billion deal that Nvidia has managed to create with many of the top Wall Street firms, from KKR to Blackstone to BlackRock and so on. As you can see, the chip makers, Micron Technologies, moving up the leaderboard as we speak, KLA. And then you have the industrials, Caterpillar and GE Vernova. You have the memory chip makers, SanDisk, and some of the financials as well, also doing extraordinarily well. If we look at the other side of the table, we do have some of the hyperscalers not doing so well. Alphabet off for a second day as well. Apple as well. Microsoft, Broadcom, and AMD, and then Berkshire Hathaway just getting dinged a little bit, but you know, nothing huge to speak of. CrowdStrike Holdings as well for some of the software companies on the move. Let's take a look at your individual groupings, right? So we have pretty much the ones that are doing better, doing way better than the ones that are not doing so well. So your industrials, utilities, materials, this perhaps on interest rates coming down just that tiny little bit. Real estate index, though, also suffering there, and consumer staples as well. So we'll see how the day shapes up, David. Coming up, the risks investors are watching as Nvidia taps Wall Street giants to finance a $500 billion AI build-out. This is Bloomberg Open Interest. Time now for our top calls. Here's Bloomberg's Nora Melinda with some of the analyst action in focus this morning.
Hey, Vonnie. First up, shares of Boeing climbing after the stock got an upgrade to buy at Argus. Analysts say Boeing is finally in a position to start building more planes after making some progress on some of those production and profitability issues that we know have been a long-term overhang for the company. Shares of Boeing up about 1.4%. Now, from planes back down to earth, Airbnb is lower after a downgrade at Phillips Securities. And this one's pretty simple. The stock may have gotten a little too expensive. It's rallied recently, and the firm says it's now trading at a, quote, premium. Shares of Airbnb down by about 2%. And finally, over to solar. First Solar is higher after getting an upgrade from Baird. The firm thinks President Trump's 15% tariffs and price floor on polysilicon imports could actually work in the company's favor, giving First Solar an edge. Shares to the upside, climbing by about 2.9%. Those are your top calls. David?
Nora, thank you very much. Nora Melinda there with those top calls. And Nvidia partnering with major financial firms to raise over $500 billion for AI infrastructure for its customers, offering few details on how this is actually going to work. Let's discuss what we do know with Bloomberg Tech editor Sarah Fryer, who joins us here on set in New York. Sarah, great to see you. Let's acknowledge what we don't know at this point. Much ballyhooed, a big announcement here. 6 major companies involved in this agreement with NVIDIA, including Goldman Sachs, the lone bank among them there. What do we know? What don't we know about what this is?
Well, we know that this is an incredible show of force by Jensen Huang. He can just convene these top banking execs all together.
They all show up.
They all show up. You got to show up and talk about AI financing. And basically, he said none of these banks rejected him when he asked for this. The question is, how much of this is already announced deals? How much of this is future deals? And how does this feed into this circular financing that has been a top concern in the market? The idea that NVIDIA is financing its own customers to pay for its products, right? Now, it's true that there is a very deep need, a vast need for financing for infrastructure and AI in order to grow, in order to host all of those AI token calls and everything you need to do to develop this technology, you do need to invest a lot in infrastructure. So the money is needed. The question is, where is it all coming from and who is it all going to?
Well, that's the thing. It doesn't sound like Nvidia is going to be on the hook here. It doesn't sound like any of these firms are going to be on the hook either. So it's essentially other people's money being invested through this platform, but that means the risk is other people's as well. What will they demand, for the risk of $500 billion, $500 billion worth of this stuff?
Well, it sounds like the risk is going to be backed by the chips themselves. But as we know, chips have a short lifespan, less than 5 years in some cases, where chips are useful before they become outdated and you need to replace them. So is that really going to work to securitize this market this way, the same way you would like the housing market? It's a little bit of innovation, but innovation breeds skepticism in financial markets because of what's happened in the past when people have gotten a little bit too creative.
One looks at this story in complement with what we learned yesterday from Intel having this share sale. It was going to be $15 billion, oversubscribed. It's $20 billion now. It wasn't long ago that I was talking to our colleague Ian King just about Intel's recent history, the trouble that it's been through. Then it got the blessing, the imprimatur of the White House, and things seem to have really turned around for this company under a new CEO. What should we take away from Intel doing this, and what it says about the role that it's playing in this larger AI infrastructure ecosystem?
Well, first of all, this is stunning because this is Intel's first share sale since its IPO. Right, this is
the
first public thing, exactly. So, I mean, the fact that they can do this now, that their stock is strong enough, not just to do this, but to increase the amount they were planning to raise, it's opportunistic, but it shows confidence still in the fact that this is going to turn into something. What we don't know is whether Intel is going to have some serious customers online for their future development. They've really cleaned up their finances. They've really done a lot to fund their turnaround. But the proof is really in can they build products that people want to sign major deals to purchase?
Yeah, and I mean, there was $100 billion worth of demand, so it's not like this $20 billion came out of nowhere. It probably could have raised more if it wanted to, and at these prices, $95. It's not like it was a massive discount, right? Is no one worried about China competition anymore?
Well, I think that there certainly is worry about China competition, but when it comes to Intel, I think that there is just enough demand for data center infrastructure to go around that it's even exceeded demand for GPUs, and there's now demand for the chips that Intel makes, those sort of basic CPUs, computing chips. Because a lot of what we're doing in AI now is not just the model development, but the actual running of those models and the more basic data center work. So certainly there has been demand, but we still need to see Intel, and this was reflected in its recent earnings, we still need to see Intel innovate a bit with its product and its foundry business to attract new customers.
Yeah, deliver on those customers and promises. Sarah, thank you so much. That is Bloomberg's Sarah Fryer. Coming up, Swiss sneaker maker On stumbles after a disappointing sales quarter. That's next. This is Bloomberg Open Interest.
Welcome back to Open Interest on Bloomberg. Quick check of the stocks on this Tuesday morning. Let's start with the major indices. We see the S&P 500 down just 0.03%. Very little movement here. That's been the story of these markets over the course of the week. A lot of wavering. We see the NASDAQ down just slightly, about 0.25% here. Look at the Russell 2000. Bit of a lift in those small cap stocks. The Dow up slightly as well. Look, a number of stories here competing for our attention on this morning. Of course, we're waiting for those data on inflation tomorrow. Going to be a crucial data point here for the Federal Reserve and policymakers there as they plan their next moves in September. We've got the Jackson Hole speech to get through before that. Another big story is a macro one having to do with oil. Some word here from the Pakistanis. There could be some sort of progress toward an agreement on the Strait of Hormuz. This has been dogging the administration, dogging markets now since the start of that war. Will there be transit of ships through the Strait of Hormuz? See what happens there. I got to emphasize again, we have been here over and over again. Looking at a few companies in specific here, Nvidia, of course, this is a huge story over the course of the last 24 hours. This agreement that Jensen Huang of Nvidia brokered with 6 major financial firms, including Goldman Sachs and KKR and Blackstone, all of them rallying around the company, providing $500 billion worth of financing. We were talking about Intel just a moment ago. That chip maker announcing a deal in its own right. of a kind, offering a share sale $20 billion, raised at $95 a share, as it looks to kind of compete in the AI infrastructure sector once again. Talking about Riot Platforms, Hims and Hers has been a story over the course of the morning as well. Continues to be that company reporting earnings yesterday, planned to enter the peptides market. Of course, this has been a company that has made so much money off of GLP-1s, initially compounding those drugs, now brokering deals with the name brand makers of those weight loss medications. We see its shares down this morning again as it's poised to make another transition here into peptides. Lastly, want to end with Nike and On Holding, the Swiss company, reporting disappointing earnings here when it comes to its outlook for the future. This is that Swiss sneaker company branching into apparel as well. We see its shares down 21% this morning, Vonnie.
Yeah, an absolutely spectacular loss for On. Just looking, it looks like it's the lowest it's been, this share price. For more on David, we're joined now by Bloomberg Intelligence athleisure analyst Abigail Gilmartin. Investors really punishing this stock, Abigail. One of the reasons for the miss and the disappointment is that On doesn't ever want a discount, right? But if I'm buying 2-year-old designs, it's obvious they're 2 years old, so why wouldn't On discount? I'm not going to pay full price for them.
Right, correct. That's a really great question. And I think what it kind of speaks to is more so pulling back on the inventory that's in the marketplace right now. So we saw this happen with Hoka, where they had too much old inventory, like you're saying, where they did have to discount because consumers wouldn't want to pay full price for it. I think On is just trying to get ahead of it. I think you will find the 2-year styles are on discount out there. It's more the styles that have been launched in the last year that are getting a refresh coming up. They're just pulling back so that there's not too much inventory in the marketplace that will lead to greater discounts going forward. And this was something we saw Hoka kind of struggle with and have to completely change their product launch cadence to make sure it didn't happen again. So in that sense, it is the right way that they're going about it, but we'll have to keep an eye on if this continues to be deliberate or if it's an underlying issue.
Last season shoes, Vonnie, I doubt that you.
That was a little bit too emotional.
No, I understand.
I will say.
But Abigail, let me say in full disclosure, I've never worn these shoes. I've seen the brand everywhere, of course. Until today, I didn't know that clouds are engineered holes in the shoes soles. What makes these so popular? What gives this company the confidence that they're able to charge as much as they are for these shoes and have the outlook that they do?
Yeah, they're definitely a premium shoe. And I do think that's where the stock price and everything comes into play. I think the quality, and they're also kind of stylish. I think compared to Hoka, we see more people wearing them to work, especially men to work. They have some more dressy shoes as well. But the performance, they have had some top marathon runners running in their shoes and breaking records as well. But they've also really gotten in touch with the everyday running communities. And I think during a time when Nike maybe fell back from that, On and Hoka both kind of got really a part of these running communities, and runners really love them. They really have been building loyalty since.
You know, is there something about being a victim of your own success here too, Abigail? Because they weren't known a few years ago, right? Then Zendaya, Roger Federer, and it felt like everybody all at once was wearing them. And that puts some people off, right? They don't want to be wearing the same thing that everybody in the street or the subway is wearing.
Definitely. And I think we've seen that kind of evolve. We've seen their shoes evolve from just being the whole shoes that everyone sees and thinks of. When they think of On, they think of the whole bottoms. We've seen them kind of go diversify and try to get out of that. And I think they have a good amount of SKU counts where maybe not everyone is wearing the same shoe. But yeah, I think it's something that their own success. But at the same time, brand awareness is only at 30% globally.
Wow.
So I think we think of them as such a bigger company than they actually are. They're still young.
Still young. Abigail Gilmartin, thank you very much. 56% growth in the apparel part of the business. She's with Bloomberg Intelligence. Appreciate that. Coming up in the next hour, Barclays economist Pooja Sriram discusses her inflation outlook ahead of those CPI data tomorrow. Plus, Rocket Lab CEO Peter Beck joins us to give his outlook on the space economy and his company's earnings that reported yesterday. This is Bloomberg Open Interest. Stay with us. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm David Gura.
And I'm Vonnie, Quinn. Matt Miller and Danny Berger are off. Bloomberg Open Interest starts right now.
Well, coming up, the AI money machine keeps rolling as Intel, Nvidia, and Anthropic line up billions of dollars.
Meanwhile, oil erases earlier gains as Pakistan signals optimism over a US-Iran deal.
And an inflation test looms, investors bracing for key data that could shape the Fed Reserve's next move. We begin with Pakistan signaling progress in US-Iran talks, but President Trump is now making reparations for Iran's hostilities a key issue.
Iran is broke, totally broke. They asked for reparations, you might say, or they asked for money for the damage that we've done. I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period. If there's damages to be paid, I think Iran should pay those damages.
I want to get the latest now from Bloomberg Washington correspondent Tyler Kendall. And let's stick with these reparations. It does seem like there's a trend emerging here where the president says there's a red line, he's not going to cross it. Iran advances, and then rather than push back, the president seems to kind of mirror what the Iranians are asking for in reverse. What did you make of what the president had to say there yesterday in the Oval Office, and how's that shaping the outlook the White House has here for some kind of possible resolution here?
David, that's a really good trend that we should pick up on here because President Trump didn't provide many details on exactly what form this compensation would look like, but it did come on the heels of Iran demanding compensation for war damages in exchange for reopening the Strait of Hormuz. Important context is that we did know that some sort of talks were happening about what potential funding could look like if it were to be allocated to help Iran rebuild after the war, but that was long considered to be a precondition for talks about potential curbs on Iran's nuclear program and not for reopening the Strait. Now you have President Trump with this new demand saying that Iran must pay compensation to the families of Iranian protesters who have died over the last 50 years, adding that Iran should also be held accountable for any death or destruction related to conflicts tied to its proxies in the region, including in Lebanon, Yemen, and Gaza. Now, as you mentioned at the top there, we did get some sense of optimism earlier today on the heels of the Pakistan foreign defense minister's comments saying that talks are, quote, shaping up in favor of peace. We can say breaking within the last hour, Iranian state media is reporting that Pakistani officials are going to be in the country today. David, we'll have to see where it goes from here because we've gotten very little detail on exactly what would amount to a potential breakthrough.
And Tyler, still no official Iran-Oman deal, right? Even though we hear it's basically done. And there was a skirmish this morning in the Strait of Hormuz.
Yeah, tensions definitely still on the high end, Vonnie, as the Wall Street Journal reported that the U.S. military ended up striking a Panama-linked vessel that, according to their reporting, did not heed warnings from the U.S. military as they continue to enforce their naval blockade. We do have new data analyzed by Bloomberg News that shows that ships are continuing to transit with their transponders off, the so-called dark transits, to conduct what are known as these shuttle routes, where essentially these ships are taking the risk to go through the waterway and then offload their cargoes and transfer them to ships that are waiting outside of the strait. According to the data analyzed by Bloomberg, at least 12 such switches happened yesterday, which is considered to be a relatively high level, considering that flows have basically dried up in recent weeks amid what has been this stall in the talks.
All right, Tyler, thank you so much. That is Bloomberg's Tyler Kendall in Washington, D.C. Well, at the top of the hour, we got existing home sales data. Let's get the details from Michael McKee, Bloomberg's international economics and policy correspondent. Michael.
Well, Vonnie, how can you be good and bad news at the same time? You have existing home sales coming in ahead of forecasts, up by 4,060,000 on an annual basis, but that's down because last month was revised higher to 4,130,000. So good news and bad news at the same time. It's a 1.7% decline month over month from June to July. Now, why is that? Well, of course, it's the same old problem, and this is where we link back to the Fed and CPI. It's mortgage rates. Mortgage rates are continuing to rise after having fallen before the war started, but as the market rates go up, the mortgage rates go up, and that is, again, crimping demand for housing. Nobody wants to get out of their old cheap mortgage. So tomorrow, one of the things we'll be watching, and this is where I, promo our CPI coverage in the CPI, is housing, and it's one of the areas that has actually been going down in the amount of increase in prices. That's the way to put it, I guess, for inflation. From April, we saw fairly high numbers, and then all the way to June, down to 0.1% for rent and 0.2 for owner's equivalent rent, which is basically the price of houses. And so we're anticipating we're going to get something similar to that this time. And some people will say, well, okay, let's cut rates and bring mortgage rates down. But that's up to the Fed.
Some people would say that. Who might they be? It's a long journey from this today to the September meeting. You got to go through Jackson Hole. We got the data released tomorrow, another round of inflation data before the September decision. Your assessment just of the degree of importance that these data have tomorrow, kind of in the scheme of things, given what we saw with the jobs report last week.
It's sort of like the second game in a 3-game set of whatever sport you want to play. It's not decisive, but it is going to be something that people take account of. We do have, as you mentioned, another CPI, another PPI, another PCE before that September 16th meeting. So what they'll be looking for is the trend. And if the trend is down again this month for July, then that's some encouraging news. And if it continues into August, then that will definitely have an impact on Wall Street's thinking about what the Fed will do.
You'll be on the sidelines for that entire 3-game set. That's Bloomberg's Michael McKee joining us here on set in New York. Mike, thank you very much. And I want to stick with CPI here. Barclays U.S. economist Pooja Sriram expects the July report to show a rebound in inflation. She writes, the respite from June's softer print is likely to be short-lived. Pooja, great to have you with us here. And maybe I could start with something you wrote, which is that the burden shifts back toward the incoming data. There was so much kind of hand-wringing about the way that Kevin Warsh presented the last decision, what he said and what he didn't say. Talk, if you would, just about what I was just talking with Mike about a moment ago here, the primacy of this data, how important it's going to be here going into that next meeting.
Yeah, I do think it is going to be one of those important data points. I agree with what Mike said. May not be decisive, but clearly all eyes on the CPI, and makes it even more important given what we saw last Friday from the payrolls report, right? Reasonably soft. If anything, it quashed the narrative that there's perhaps a reacceleration taking place, gave markets a little more comfort that, it could be a cause for the Fed to remain on hold. But clearly, I think the inflation data are more important, and that's why tomorrow's report is very, very key.
How much more difficult is the market finding it reading these data now that we know that Kevin Warsh doesn't just look at CPI? We're not even quite sure how much weight he puts on CPI these days, and he's not the only one at the Fed either.
Yeah, I don't think the data have lost importance. I still think the market follows this very closely. If anything, I think we're going one level deeper, trying to unpack exactly the sources of inflation, volatile versus non-volatile categories, how much of it is tariff-induced, how much of it is coming from the more inertial services components. So I think we have become a little more tuned to where the sources of inflation are coming from in a given report. As far as the alternative data sources, I think it's very unclear what the Fed or the FOMC is going to be watching outside of the CPI and the PCE.
I want to ask you how kind of opaque the outlook has gotten for policymakers. So at the beginning of this conflict in the Middle East, you heard from policymakers saying their tendency is to look through what's happening here. As we round the 6-month mark here of this conflict and so much ambiguity about what's going to happen, what we go back to or don't go back to, does it become more and more difficult for them to do that? In other words, how much is that a factor? Are energy prices a factor in a way that maybe the Fed policymakers didn't think it would be at the beginning?
I think so. And I think what's made it more difficult is this isn't, just one oil price shock. It's a shock that's come on the heels of several other shocks that preceded it. And, there was the tariff policy shock last year. Prior to that, there were, issues from the pandemic that were still persistent in terms of supply chain issues, which is what makes it difficult, I guess, for the FOMC to just simply look through this as being a usual oil price shock. And I think what's even more complicated this time around, it doesn't seem to be like a one and done issue either, right? Just this morning, we've been discussing the US-Iran talks. It seems to be like this constant waiting game. And it's interesting that we've been so used to Brent or crude prices just doing a yo-yo at this point in time.
It seems.
We did see a little bit of fragility in the labour market. Some are pushing back against that and saying, look, the unemployment rate was lower and, there's a problem with supply as well as demand, so it's a fine labour market. At the same time, there's one or two out there still calling for cuts this year. Is there any, logic to the fact that there might be some fragilities in this economy?
I think on the margin, perhaps, right? Undeniably, labour demand has been slowing compared with the pace that we saw, let's say, last year or the year before that. And so if you just pick up the 3-month moving average rate of, say, private payrolls, it's a chart that will show a line that's going down to the right. But I think what's happened alongside that is labor supply in the US has also been shrinking. And that's the story that we saw in last Friday's report in terms of the participation down 4/10 in just 2 months. And so if you think about it as demand versus supply, the labor market actually seems to be in reasonable balance, where demand is just about outrunning the supply side. And in that world, you could still get the unemployment rate dropping, even with very lackluster job growth at the top line level.
Talk a bit more about the break even. You see that as roughly zero at this point in time. What gives you your confidence in that?
Well, I think if you look at the fundamentals on the supply side, we've been highlighting two headwinds. And it's not just us. I think this is a narrative that we've heard from the FOMC as well, that we've had immigration restrictions that's been weighing on labor force and labor supply. And then we also have an aging U.S. population.
Demographics, yeah.
Yeah, and so you're losing, call it about 30,000 workers a month just because they're heading to retirement age and dropping out of the labor force. And so you sort of put that together and the break-even pace automatically comes down to, call it 0 to 10,000 a month. Of course, error bands around that, but it's safe to say that the inflow into the labor force has dropped substantially relative to the prior 2 years.
Pooja, when you see, the 30-year yield at 5.23, the 10-year yield at 5.73, which it was this morning, or a deal like we saw with Nvidia and this $500 billion worth of potential securitization, does it concern you for the economy at all?
Well, I think on the margin, perhaps. But if you look at the fundamentals of the economy, it's still pretty good on other aspects, right? If you look at just take AI, for example, the investment side of it, very supportive in terms of the resilience for the economy. You look at the average household balance sheet, it's still doing reasonably well. You could debate about households perhaps losing a bit of purchasing power given the energy price shock, given slower wage fundamentals. But on balance, I would say we're looking at an economy that's perhaps growing at or slightly above potential.
All right, Pooja, thank you so much for coming in to see us and chatting the economy with us. That is Pooja Sriram of Barclays. Let's get a check on the markets now. We're about 45 minutes into the trade and the S&P is holding on to gains just fractionally, up about 6 points. Plenty of stocks doing well, though, in the S&P. The best stock performer right now is Jabil, up 5.5%. Apollo Global Management also up 5%, perhaps on this Nvidia headline. Of course, Ares and some of the asset managers, KKR as well, among the top performers. In terms of yields, you're seeing the 10-year quite stable at 4.68, and Brent crude coming off its highs. It almost touched $90 earlier on after that skirmish in the Strait of Hormuz. Let's get a look now at some movers on our radar with Bloomberg's Nora Melinda.
Hey, Vonnie, a bit of a mixed bag this morning. Looking at shares of Intel now higher, climbing from yesterday's decline after a pretty massive share sale. The company went looking for $15 billion and came back with $20 billion. Clearly, investors were willing to hand over their cash, with Intel saying it's building up its war chest as it tries to grab a bigger piece of the AI boom. Apparently, $15 billion just wasn't enough. Up next, AST Space Mobile lower. After quarterly revenue came in below expectations, we're now seeing shares to the upside, climbing about 0.8%. The company did hold its outlook, though, as it looks to keep building out its cellular network in space. And we're staying with space for the next one, too. Rocket Lab lower after signaling another possible delay for its Neutron rocket. Shares of Rocket Lab climbing by about 1.5%. Now, that launch may have to wait until 2027, delaying its plans to take on SpaceX. And we'll have to ask the man himself, founder, president, and CEO. Peter Beck joins us later this hour. You don't want to miss it.
Nora,
Those are your morning movers, David.
Thank you so much. Yes, looking forward to that conversation with Peter Beck, and a lot to talk about with him, certainly about those earnings, but the path forward here as well, as we kind of see whether or not that rocket will get launched here in the months ahead. Coming up, Nvidia tapping Wall Street investment giants for $500 billion in funding. Get more details on that deal coming up next. This is Bloomberg Open Interest. Now to high interest to look at what's making headlines around the world. New details emerging around Chipotle's race to recall jalapenos. They were tied to a salmonella outbreak. The company was able to identify and destroy the problematic peppers before health agencies had nailed down the culprit and announced nationwide recalls. It all started when they'd sent the company a guac signal warning there was trouble with something in the guacamole. Apollo providing $2.6 billion of financing to the owners of the New York Yankees. It is the private capital giant's largest investment to date in U.S. sports. The deal consists primarily of debt financing alongside an equity component and will be used to support the growth of the franchise and refinance existing debt. And finally, Nvidia tapping Wall Street for $500 billion in financing for AI infrastructure. U.S. investment firms Apollo, Blackstone, BlackRock, Brookfield, Goldman, and KKR all partnering with the tech giant. The company saying in a statement the coalition will, quote, create dedicated pools of capital at significant scale at attractive rates for Nvidia customers. Vonnie.
Well, David, we're going to stick with this now and get more on the funding commitment with Bloomberg senior reporter Silas Brown. Silas, thanks for joining. So this is a platform, but what form will the borrowing take, or what forms?
Yeah, the real specifics of it is still relatively unclear. The commitment is $500 billion, and I guess that will be termed out over a series of different transactions. But it's not the first. I mean, it's definitely the largest to date in debt financing world when it comes to private capital firms. But I mean, it's symptomatic of a broader push to connect the kind of people leading the AI transformation and these, the kind of like new form of Wall Street in the form of private capital firms.
Silas, talk about the novelty of this deal. And to me, it's that they're going to use compute power as collateral here. A lot of confidence on Jensen Huang's part that will be attractive to investors. Certainly it was to the heads of these six firms. But that is something new as we venture into this AI world.
Yeah, I mean, look, I remember I'm old enough to remember the glory days when $1 billion private credit deal was considered large, and now they're striking 500 billion transactions. Yeah, look, I mean, in terms of a kind of assurance of faith from investors, I mean, Jensen Huang has managed to generate interest from the sort of, I guess, the creme de la creme of Wall Street firms, the six that you listed ahead, and I think presumably, it's obviously a very strong statement from both Nvidia and the six firms listed.
I was speaking with Matt Bloxham of Bloomberg Intelligence a little bit earlier, Silas, and he mentioned that this being a platform and the fact that we could have all sorts of structured products and everything from vendor financing to whatever the other side of the spectrum is going on, that this could eventually pose some kind of systemic issue. I mean, we're obviously far away from that, but is anybody talking about that?
Yeah, I think people are talking about that. I mean, I guess whenever a market kind of surges in the way that we're seeing this market do, I mean, people raise questions about whether or not the market is or isn't becoming systemic. I think they've said the same about leveraged finance and high yield bonds back in the day. I think the thing to note here is that where private capital is relevant is the private capital firms that manage significant portions of insurance money that are very rating sensitive. And I think you see the likes of Blackstone and Apollo and KKR move into this kind of new frontier, which is private investment grade, and that is not just straightforward corporate lending, but it can be a range of things. You mentioned vendor financing, but it can allow the clever people at these firms to have a fair old ride constructing new and innovative forms of financing. And I think we're seeing that right now, and I'm sure as details come out about the Nvidia transaction, I think we'll see it in this deal specifically.
Silas, one of these things is not like the other. That's Goldman Sachs party to this deal as well. And I wonder sort of what unique position it's going to have here in this deal, the role that it's going to play here, and sort of how it sees it as useful for its business.
Well, I would say that Goldman Sachs has managed to maintain a very strong foothold in private credit as well through its asset management arm. And is one of the kind of biggest hitters when it comes to the leverage side of private credit too. And I think I don't know whether or not Goldman Sachs' asset management business is involved in this, but I do know that obviously Goldman Sachs has a very strong underwriting capability and book running capability. So I assume that any form of public financing will be or they'll be annoyed if they're not the lead book runner in
well
those
said.
Transactions.
Yes.
Silas, thank you so much. Wonderful context there with Bloomberg's Silas Brown. Still ahead, excited to speak with Rocket Lab founder and CEO Peter Beck as the company warns of a delay with its Neutron rocket. This is Bloomberg Open Interest.
This is Bloomberg Open Interest. Quick check on stocks here. A light lift to the markets on this Tuesday, nay, a barely perceptible lift to the markets, I think you could say here. See the S&P, the NASDAQ, the Dow, all up slightly here. The Russell 2000 looking at small caps at about 0.5%. The reasons for this geopolitical having to do with some companies as well. Let's start with the geopolitics here amid news that we heard from our Washington bureau. There might be some closeness to an agreement when it comes to reopening the Strait of Hormuz. The Pakistanis, who have been a kind of interlocutor throughout this entire war, saying that they're close to some sort of agreement in the Middle East that could open the Strait of Hormuz. We see Brent crude down slightly this morning, but still, in light of we haven't had a deal here, oil has been up higher over the course of the week. Looking at Nvidia, and again, this is the major story here, I think, over the last 24 hours, this financing deal that was agreed to by Nvidia with 6 major financial firms, including Goldman Sachs and KKR and Blackstone and BlackRock. We see it up 0.9%, almost a whole percentage point there on the news of that deal, again, for AI financing. Look at Hims Hers. That company reported earnings after the bell yesterday. The company getting into the peptides game, it says, pending approval by the U.S. Food and Drug Administration. Shares down slightly as it sort of tries to move beyond GLP-1s. And looking at Nike and On Holding here is issuing disappointing sales figures here, maintaining its high prices for sneakers. Also getting into apparel as well, Vonnie. That's what's driving markets on this Tuesday morning. Back to you.
All right, David. Well, coming up, we're going to be speaking with Rocket Lab CEO. Rocket Lab warning of a new delay to its latest rocket launch. We'll speak with Peter Beck next. This is Bloomberg Open Interest. Shares of Rocket Lab lower. The company is signaling its Neutron rocket could face yet another delay, pushing its bid to challenge SpaceX's Falcon 9 potentially into 2027. It's not all doom and gloom, though. Shares still up more than 12% year to date, 74% year over year. Joining us now is Rocket Lab founder, president, and CEO Peter Beck. Peter, thank you so much for joining. Can you clarify any confusion about Neutron? So yesterday it seemed like you were pushing back the date of the launch a little bit. Is Neutron still on track to actually launch off its launch pad this year, 2026?
Yeah, I think probably your headline's overblown it a little bit. What I did say is that it's getting a little bit tighter to get a launch away this year, which is just being honest and transparent. It's a rocket program. They're very, very difficult and complex and large programs. But our intention here is to still definitely push hard to go try and get a first flight away this year. But I think the real question that should be asking is what about the 10th flight? Because these programs, obviously first flight is important, but flight number 10 is actually really, really important because that shows that you've got into full sense of scale and cadence and reusability, which is really the most important thing for the whole program.
I see us on the word there, cadence. Tell us a bit about that. How you're thinking about the cadence going forward here, and the viable path to getting there to a regular cadence.
Yeah, well, I mean, if you look at our current vehicle, Electron, we actually scaled that faster than any other, rocket in history. So we went from, to 0 to 50 flights in the shortest time in history, and we're on track to, get to 100 flights in the shortest time in history with that vehicle too. So we know a thing or two about, taking a rocket, putting it on the pad, and then flying it over and over again. But Neutron's really important for a few reasons. I think a lot of people focus on it plugging a hole and providing competition for a Falcon 9, which is an important part of its job. But Rocket Lab is an end-to-end space company, meaning that we build satellites both for ourselves and for other people. And with our pending acquisition of Iridium, we really need our rocket to launch our own satellites. So at least 50% of Neutron's capacity is going to be consumed by ourselves.
Obviously, SpaceX was able to raise a humongous amount of cash recently. Peter, how do you intend to continue to raise cash in order to fund some of these expensive endeavors?
Well, I think we're a little bit different than SpaceX. Elon has very grand aspirations that require a lot of cash. For us, we're in the business of getting into cash flow positivity as quickly as we can. And if you look at some of the acquisitions that we've done in the past and about to do, that puts us in that realm very, very quickly. So I think we have a very different sort of profile to the other two big rocket guys. Start off where I'm certainly not the richest two of the richest people in the world are our competitors, so they have a totally different cost of capital and sense of capital. We've always been that rocket company that has had to be very commercial from day one, and we're about building a good solid book and a commercial enterprise that's enduring and making money.
I look at the report, backlog, $2.36 billion with 90-plus launches here. How should we look at that? How should investors look at that backlog? And at what point does it become something that should maybe raise some concern with investors if it gets to be a certain size or it gets to grow bigger and bigger again?
Yeah, well, I mean, I think everybody loves a great big backlog, and I think between the last quarter and now we added nearly $1 billion of backlog, to the company. So, but backlog is a great metric, but execution is the true measure. And if you look at the company, I think we've established ourselves as as a very strong executors. Previously and throughout history, we do what we say we're going to do.
The Iridium deal, as you say, that's pending complete completion, it potentially opens the door for direct-to-device products and that market. How do you see that faring, and particularly against some of your competitors, such as SpaceX?
Yeah, so look, I've been saying this for many, many years, and I think it's been proven out with evidence from other companies. But the really large space companies of the future are going to look all a little bit the same. They're going to have the ability to build satellites at scale, the ability to launch their own satellites with their own rocket, and have a bit of a communications or a comms play. And Iridium is the entry point for us. It's by no means the end point. And one of the reasons why we like the Iridium platform so much is that it has a very unique spectrum, being an L-band spectrum, that allows you to do very unique things. And Iridium has built an amazing business on the back of safety-critical, defense-critical infrastructure. And that's something that we'll continue to grow and push. I don't think you're going to see us going head-to-head in the broadband market. I think that's very well served and a tough place to be. But I think there's a tremendous opportunity in some of these more discrete and unique areas of the comms market.
Peter, talk to us about the Kepler deal, which you announced yesterday, this deal with Kepler Communications, purchasing a dedicated launch of Neutron for no earlier than 2028. How important is that to you in the business?
Well, it's funny because I think naturally a lot of people would expect that we just should sell all of the rockets that we have for eternity, and if we were just a rocket company, that would be a great assumption. But we have to assure that we have rockets left in production and available to launch for our own aspirations, also for some of our defence customers who need assured access to space. And right now, I've never seen the rocket industry and launch so constrained. So for us, we are extremely selective about who we give up this very valuable capacity to on the Neutron rocket. So it was great to have the Kepler guys on contract. We've known that team for a very long time, but it is a very very kind of constrained environment right now that we have to navigate carefully.
Peter, what's the detailed plan for getting to cash flow positive? Is it just a matter of time?
Yeah, absolutely. I mean, Neutron, after we have the first flight of Neutron and we flick into commercial flights, that is a huge point, inflection point for the company. And then, of course, any acquisition like Iridium does that immediately. So we have a fairly short time horizon to that.
I look at that pantheon of Mynaric and Motive and Iridium, which we've talked about. Are you hungry for more deals yet, or are we going to have a pause here in terms of the company's acquisitive stance?
Yeah, never done. I mean, look, all of those acquisitions have been very strategic, and I think launch is a tremendous moat, and everybody can see that. It's the big show in the sky. But actually, we acquired a whole bunch of component companies and scaled those, and components are just as much of a moat. So, no matter how much capital you had, if you just turn up and say, I want to build 1,000 satellites, you just can't, because there's just not the supply chain there to go and provide all of the components for the spacecraft. So for us, I mean, that's not a constraint for us, of course, but for other people entering the market, it's a huge constraint. So you'll continue to see us, tuck in those little deals in the side, but deals like Iridium certainly aren't going to be the last, and you shouldn't think of us as the L-band comms company. This is the first of many, I would say.
All right. Well, the stock is very close to session highs, down just 1.8% now. Peter, thank you so much for joining us. Peter Beck of Rocket Lab. Let's get a check on the broader markets. Everything in the green, as it were now, with the S&P 500 just holding on fractionally, up 4 points. We did hit that record 2 days ago, and then we were down 0.3% yesterday. So we'll see if we can make it to another record today. The Nasdaq 100 also up fractionally. Plenty of good news stories in the market today, but also a little bit of skepticism potentially. The 10-year yield at 4.68 were 5 basis points off our high of earlier this morning, when tensions were a little bit higher on a skirmish in the Strait of Hormuz. Pakistan, though, coming out and saying some sort of arrangement seems to be at least on the horizon, and that sent oil lower. We're wavering, 87 a barrel right now. Let's get a look at some other movers on our radar with Bloomberg's Nora Melinda. Nora.
Hey, Vonnie, let's kick things off with a pretty massive decliner. First up, On Holding, having a brutal morning and also heading for its worst day ever. That's after sales fell short of expectations. You're seeing shares to the downside plunging about 19%. The company trying to keep those sneakers premium and keeping prices high. That's rather than discounting some of the older styles, and turns out that's getting a bit tougher to continue forward with. Next up, over in healthcare, Hims & Hers is also lower as it gets ready to jump into a new market, the market being peptides. The company plans to launch there before the end of the year, and this all comes after it recently cut its full-year profit outlook, so you are seeing shares pressured down by about 2%. And finally, this one's kind of a wild card. Anthropic just signed a $9 billion deal with Riot Platforms for power capacity at its Texas campus. How much power are we talking, though? Enough for roughly 143,000 homes at once. Just another example of how much energy all this AI actually needs. You're seeing shares of Riot climbing by about 4.8% this morning. Those are your morning movers. David?
Norma, Linda, thank you very much. And very much the story we're going to be focused on here next, just the need for more AI infrastructure and the costs of all of that as well. CoreWeave is higher ahead of earnings after the bell today, but the stock has had a tough track record on earnings, falling after each of its last 5 reports. Joining us now is Bloomberg Equities reporter Carmen Reinecke. Carmen, great to have you with us. And tell us just a bit about the uniqueness of this company. This is a company that rents cloud computing power for artificial intelligence. And as I mentioned there, it's had a tough row to hoe when it comes to its latest round of reports. How much optimism is there among analysts and investors that this time around it's going to be different?
Yeah, that's a great question. I mean, I think the thing is we just have such an interesting trend that's come in here for CoreWeave. So the stock went public just over a year ago. It's had a really incredible performance. I mean, it's still up more than 25% this year, over 120% since the IPO, but it's been very volatile. And we've seen this pattern of it rising into earnings and then falling on the results, sort of kind of regardless of the fundamentals here. It's really interesting because there's so much demand for the kind of compute that they have, but getting that supply online is something that people are sort of constantly looking for. So what's important in this quarter is the guidance, the forward guidance for the third quarter. The company has been building out their capacity, investing very heavily in that. And they've said that they're going to start seeing the benefits come to fruition sort of in the second half of the year here. So what they say about their forward guidance and the revenue and adjusted operating margins going forward is going to be really important. And we'll see what the stock does. It's obviously, very difficult to know what the reaction exactly is going to be going into earnings like this.
Carmen, how much will the likes of Michael and Trader and everybody at CoreWeave be looking at Riot Platforms today and these Bitcoin miners that could potentially decide, well, we have all this compute power, but Bitcoin isn't doing it for us anymore, so let's just lease it out?
There's something so interesting happening here. I think even just from CoreWeave's last report, so much more competition has come online. So we've had, Meta saying that they were going to rent out compute. It was a huge part of SpaceX's earnings that we heard, a week ago or so, that they also have sort of excess capacity, or they're hoping to rent out compute, and seeing these Bitcoin miners sort of come online in the same faction. Obviously, that is a lot more competition. Generally speaking, I mean, CoreWeave is much ahead of sort of its other neo-cloud peers, so I think it has that advantage in the space, but it's something they definitely have to keep an eye on, and I think what they communicate about that to investors is going to be incredibly important going forward.
Carmen, let me pull an audible here. I'm curious how your understanding of this story, the way that you're looking at these earnings is shaped or has been reshaped by the deal that we've been talking about over the course of the morning. That's this Nvidia financing deal and sort of what it says about the future of this sector, the fact that we have Jensen Huang talking about the commodification here of compute. What does that mean for a company like CoreWeave, if anything?
Well, I mean, CoreWeave and NVIDIA are very closely linked. Remember, actually, NVIDIA sort of underscored their IPO. I think just what we're seeing is there's so much demand here. Capacity is so constrained still that it's a huge total market. All of these companies are really just racing to the finish line here. And it's been really interesting to watch it unfold. And it's going to continue to be really paramount in the AI build out going forward.
Absolutely. Carmen, thank you very much. Appreciate that. That's Carmen Reinecke joining us here. She, of course, is with Bloomberg. The New York Yankees agree to play ball with Apollo. We're going to bring you details on a new deal just announced today. It's coming up next on Open Interest on Bloomberg TV.
Apollo landing a deal with the New York Yankees. The firm will provide $2.6 billion of financing to the ball club in exchange for debt and equity. Joining us now is Bloomberg sports reporter Randall Williams. So the valuation, Randall, how to read it? You tell me.
Well, they didn't disclose the valuation, and I think that is something that everyone has questions about. Private equity firms are permitted to invest up to 15% into a club, but $2.6 billion is a lot of money. Of course, this is going to be a mix of debt and equity, but they didn't say a number. But I mean, just speculating, it has to be over $13 billion just off of the sheer strength of how high that number is.
Randall, why is this happening now? I think is a question a lot of people are going to ask, and I think a lot of people would think of the Yankees as like ironclad brand, known throughout the world, sells a lot of apparel, tickets as well. Is there a need for this kind of investment in the club right now?
I think they saw one. And if you think about the MLB calendar as it sits right now, the Yankees will likely go to the playoffs, but there are questions surrounding whether there will be an MLB season at all next year. Of course, the Players Union and the MLB will be collectively bargaining, with the issue being a salary cap versus no salary cap, and whether the players and owners can come to terms on that in time for next year's season. And everybody that I speak to says it isn't likely. And so from that perspective, now you're losing money on games. There's 81 home games a year, and teams alongside the Yankees will be losing that.
We had a screen up there of the various firms that have been investing in sports, and obviously franchises' values just seem to be going higher and higher and higher. This is a little bit of a different kind of a deal, though. What other clubs might be interested and might be attractive enough to do a deal like this with?
I think that for Apollo, which also has investments in Wrexham and also and Atletico Madrid, the question really it sits with owners as to whether they want to have private equity dollars in their capital room. And there's also other ways to raise money. They can have conversations with limited partners and billionaires who just want 5%, 3%, 10%, and sometimes 15%. But the reality is private equity has the deepest pockets, but they also want a return at some point. And so how long are they going to sit at that table before they say, hey, you know what, this franchise value has risen long enough and we want out?
Just ask you lastly about that cap. You said there's like that 15% threshold private equity can be at in baseball. Across leagues, is there any movement to raise that? How's the environment kind of changing when it comes to the appetite for private investment?
Baseball's right in the middle. The NFL is at 10, which is the most restrictive, and then the NBA is at 20 per firm, and then the same 30 cap per franchise. And so I think baseball is fine with where it's at right now. They've seen a lot of private equity deals, and right now none of them have gone south, and so they'll sit with that for a little bit. But what remains to be seen across sports is the exiting. There have been few exits. I want to say maybe 2 or 3 tops, but over time that's going to change. And as we've said multiple times, franchise values are continuing to rise. So what happens when that 10% stake that you bought in at $800 million is now worth $2.5 billion? And who's going to buy it?
There must be a lot of activity around the Knicks right now, is there?
There are probably dozens of people who want to buy a piece of the Knicks, but James Dolan has said he's not selling.
All right.
All right. Randall, thank you so much. Bloomberg's Randall Williams on all of the sports cases for us. Coming up, primary day across 6 states. We break down the races to watch. This is Bloomberg Open Interest.
All right, 6 states, count them, 6 states holding primaries today with key races testing progressive strength among Democrats and President Trump's influence within the Republican Party. Let's get the latest from Bloomberg's Kayleigh Lyons, co-host of Balance of Power. Kayleigh, I'm looking at the list here: South Carolina, Wisconsin, Minnesota, Connecticut, Vermont. I think there's a tendency here to draw connective tissue, what we saw in Michigan. What are you watching on this Tuesday morning when it comes to these primaries?
Well, if you're looking for connective tissue from Michigan, it's going to be the Wisconsin gubernatorial race, David, that most will be watching, as there is a Democratic socialist who right now appears like she could be the frontrunner, Francesca Hong, who, of course, is a very progressive former chef who has kind of skyrocketed in terms of popularity in the state of Wisconsin. She looks like she may come out on top of former Milwaukee County or current Milwaukee County executive David Crowley. And that could be a real test of the pull of socialism, the shift of the party, the Democratic Party, more toward the left. As this could echo Abdul El-Sayed's victory in Michigan yesterday. Both of these states, Wisconsin and Michigan, obviously critical because they're not necessarily deep blue states. They are presidential swing states. And so directionally, this could be very telling in terms of the Democratic Party. You also may see some flavor of that as well in Minnesota, where there is a Democratic primary to fill the seat of outgoing Democratic Senator Tina Smith. Peggy Flanagan is a progressive who is running against the more establishment moderate choice in Congresswoman Angie Craig. So there could be some signals there as to how far left, at least primary voters, are looking to be. But of course, November, if progressives get elected, could be a very different story, as Republicans do feel like the progressives are the easier ones to run against in the general election.
And of course, South Carolina on watch as well, filling Lindsey Graham's seat, but it's a very, very crowded field and includes Lindsey Graham's sister, Kayleigh.
Yeah, Lindsey Graham's sister, Senator Darlene Graham, of course, has been in the United States Senate for a few weeks now in the aftermath of his death last month, and she is the Trump-endorsed candidate. So it is going to be a real test of the president's endorsement in South Carolina, whether or not she is able to do well enough to likely advance to a runoff. Remember, in South Carolina, a candidate has to have more than 50% of the votes to secure the party's nomination. It looks at this time unlikely that that will happen because the field is so crowded. So it's likely that she may go, or two candidates may go to a runoff 2 weeks from now on August 25th. She is up against a few who have solid name recognition in the state of North Carolina. Congressman Russell Fry is in the race, as well as Congressman Ralph Norman, fresh off of a gubernatorial bid. Also in this cycle, he didn't perform particularly well, but it does obviously bring him to the forefront of voters' recent memory. So it's going to be a question of whether Darlene Graham can advance, likely to a runoff, and what ultimately her politics will look like relative to her brother if she is able to secure a permanent place in the United States Senate. She's indicated, for example, that she may not be as hawkish on foreign policy as Lindsey Graham was famous for, looking more at issues like affordability. But it's going to be a real test of the president's pull here because he, again, has been pulling hard for her. He participated in a tele rally for her last night. And we also may see a test of the Trump endorsement, I would just add, in the Minnesota governor's race, because Mike Lindell, the former CEO of MyPillow, the founder of MyPillow, he stepped down as the executive to focus on his campaign, is in the running for the Republican nomination to be the next governor of that state, and Trump is backing him as well.
Indeed, and posting on Truth Social as well, Mike Lindell deserves a big win in Minnesota today. He writes, "Nobody has worked harder and given up so much in fighting for free and fair elections. Go out now and vote for Mike Lindell for governor. He will not let you down. Thank you," signed President DJT. Of course, Mike Lindell, noted election denier. Kayleigh Lyons, thank you very much. Co-host of Balance of Power. You can catch that show at 1 p.m. and then again at 5 p.m. Eastern time. And let's get a quick check of the markets here on the way out here at the bottom of the hour. We're looking at the S&P 500 and the NASDAQ. Kind of wavering. I think that's been the word they've been using here. Up only slightly this morning. Looking at the Philly Semiconductor Index, they're up 1.5% on the heels of that deal that we've been talking about over the course of the morning surrounding Nvidia. Coming up tomorrow, Diane Swank of KPMG joins us on those inflation numbers. This is Bloomberg.